Whether you're an investor or somebody just trying to keep up with the madness, there's some information that you need to know. In this video here, I'm going to talk about what's happening at the central bank level, and then I'm going to show you what's going on in the economy and what that means to you directly. Everybody's going to be affected by this, so you definitely want to listen up. Here we have Jeremy Grantham. Now, Jeremy Grantham's famous for calling a few of the previous market bubbles, and some say that, he's washed up, he doesn't know what he's talking about, this and that. But I think it's important that we see what he had to say. This is a Bloomberg interview that he did, and then I will show you momentarily, looking specifically at the report that he did and probably the reason why they interviewed him. But really quickly here, quote, "My bet is that we are going to have a fairly tough time of it economically and financially before this is washed through the system." What I don't know is, does that get out of hand like it did in the 30s? Is it pretty well contained as it was in the 2000s? Or is it somewhere in the middle? So he's trying to address what we are dealing with right now today. Nobody really knows. That's the point. If you look at Warren Buffett and what he's doing, a lot of people were saying, you know what? He's not doing any acquisitions at this time. He's leaving so much cash on the table. He's losing out to inflation. What a big mistake. And now things have really turned around, haven't they? You see that, oh, he's so smart. He's buying Occidental Petroleum. He has so much Apple in his portfolio. He's doing all these things. And really, people, go through these cycles and they might look smart one minute and they might look silly the next. But look at what he had to say. Okay, I'm going to show you this. And you could see for yourself that, as far as I'm concerned, what we look at, here it is right here. You can see the stages of a super bubble. Now, the report is quite long. If you want to read it for yourself, please do. Links in the description, as always. Here he says, "My theory is that the breaking of these super bubbles takes multiple stages. First, the bubble forms. Second, a setback occurs, as it did in the first half of the year, when some wrinkle in the economic or political environment causes investors to realize that perfection will, after all, not last forever, and valuations take a half step back. Then there is what we had just seen, the bear market rally. Fourth and finally, fundamentals deteriorate and the market declines to a low." So the expectation right now here, not just from Jeremy Grantham, but many others, have basically said that this was a bear market rally and that we would go to a lower point. Now, there have been even some of the most bearish investors who have said, let's say around 3,400 on the S&P would likely be the bottom. The Federal Reserve would step in, they would reverse course, or simply the fact that investors just won't have it and they would just continue to buy and buy. It really shows you what has happened during this period of time in which the markets do not simply care any longer. It's wild, to say the least. I don't know where it's going to go, but I think that we should be paying attention to what happens during this period of time. What's going on? I'll give you that right now, okay? Looking at this, you can see more. You can look at all of these. I pulled up so many different reports. This happens to be from Bank of America, expected Fed balance sheet projections. The expectation here is that they would actually dip below 7 trillion, and that's for the Federal Reserve. And you look globally, I mean, it's obviously much larger when you combine the ECB, the BOJ, and so on. But I just want to show you, if I go through here, you move through and just look at the next one. This happens to be from Morgan Stanley, where they expect theirs to be on the right-hand side, projections of the Fed's SOMA portfolio, assuming they do certain things. I mean, we don't know how much they're going to taper during this period, but you can see it for yourself. Depending on the taper, it will affect what the balance sheet will be. Again, this is all speculation. That's my whole point. And you look at this, shifting monetary policy regimes from 1960 up until the present. And this is showing us basically the cumulative percent change in the shadow rate from previous to the top to the bottom. So what is the shadow rate? So I'll just quickly cover that right now. Shadow rate is basically, imagine you hit the zero bound, 0% interest rates, okay? But technically, because of all the quantitative easing, it is as if interest rates were in the negative. So when you factor that in, this is what they call the shadow Fed funds rate, okay? So looking at this further, I just wanted to highlight the fact that it is quite extreme, to say the least. And of course, we have all of this, activity that had happened from 2020 into that period. But now we're reversing course. That's all I'm trying to show you here. And that reversing course Keep an eye out for this, okay? Because we're going to talk more about it. And this is just showing us, SocGen, Societe Generale, what they predict. I mean, this and that. You look at this, oh my goodness, fancy charts. It looks like an Apple presentation. But what does it tell us? What does this mean? Okay, we have to understand that everybody is being moved into the same direction on a global scale. Let me get into that in a second here. This is a paper from the Fed itself. Inflation as a fiscal limit. What are they saying here? Well, basically, that there's only so much that can be done. The increase in inflation could not have been averted by simply tightening monetary policy. And what do they do? And what do they say? Oh, that's right. It's the government's fault. They put it on their backs and then they flip it back here and forth. I mean, it's crazy. They're just trying to say it's not our fault. Look, they're both at fault. You can't print money and get away with it. You can't do all of these different things and simply get away with it because it will haunt people, and most importantly, the middle class. Okay, that's just the way it goes. So when I look at this, I see for myself that it's really key, as far as I'm clear, that there's going to be an effect on you, the individual. Just take a look at what I have written here. Why inflation is a problem for everyone. So I'll cover these few points and then I can rant on. Interest rates were so low for so long. Markets and corporations are addicted to easy monetary policy. Why is this the case? Of course, because they were told, you don't have to worry. This is never going to be an issue again. Balance sheet is near historic high in the US and globally. You look at this, I just showed you where they believe it's going to go. I'm not sure, but my goodness, do they ever need to reduce that? Inflation is extremely high and needs to be stopped by pulling back monetary and fiscal easing, but doing so will cause havoc. And last but not least, if more geopolitical or supply chain issues persist, inflation will remain longer than governments want and will result in mass civil unrest. Now, you hear me say that, and someone will say, no way, it's never going to happen. Well, I'm about to show you some information that shows exactly that. You didn't need to hear it from me, and you could simply just think of it because there have been so many examples previously. We know this. And now I'm going to show you why. It's because of the prices escalating beyond the reach of the average individual. Okay, this is just a simple matter of fact. You've got to really as far as I'm concerned, you've got to be aware of all of this. Look here, cost of growing food in the US is set to rise by most ever in 2022. Prices for everything from fertilizer to animal feed to labor are skyrocketing. What about this? Stock indexes face fresh low this year, according to Morgan Stanley's Wilson. So what is this? Well, you have a situation in which people have relied so heavily on their stock market returns, and now that's an issue. Their home prices relied on that. Now it's an issue. You see, everything's totally fine until it isn't. Next, inflation and war are stoking civil unrest across the globe, according to research. Bank of America, both developed and emerging economies are taking a hit with the war in Ukraine, rising food and energy prices fueling greater risks, something that I've shown you time and time again. And I could give you 1,000 examples of this. Then we have this. Food bank usage is off the charts, higher than it was in 2020. Think about this. Unemployment, super low on the U3 unemployment rate. The jobs situation, looking fantastic. And yet more people are using food banks than ever before. Does this seem a little fishy to you at all? And then we have this. It costs 20% more just to cover the basics in the UK this year. The UK has seen some of the biggest increases in cost of living in the last 13 years, and just see how extreme it is, to say the least. And then we have this. BlackRock says energy is a bright spot as it sours on stocks. They went to underweight in equities in July. So what does BlackRock know? What does Jeremy Grantham know? And what do others that have been saying basically the same message? What are they trying to highlight here? Is that the risk is so high because of the dependence on all of this with the the nonsense that's been going on. The monetary easing has consequences, and we are feeling that right now. Now, I do believe in the short term, stock market might actually not fall that much. This is never going to be, so linear because you have to look at the amount of people that are shorting at the time, the investors that are shorting, some data that I showed you, and then you have to look at where we are in terms of, options purchases. You have to look at the sentiment, and it shows basically overall bearishness as we did, let's say a month or two ago. That just is a simple part of a cycle. But where we are right now, if you when you zoom out, it is very clear. And that is without the easing, there's simply no way that this can look very strong. It's just not going to happen. And if they reverse course, well, then that's a different story. So this is the situation we are in today. I need to highlight that again and again and really give you the details and the data because I think it's important. If you do think that this is valuable, make sure you subscribe to the channel because I bring out a video every single day and I, of course, want to give you the best. See you on the next one. Take care.